Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 20th, 2025, and we're diving into the latest earnings report from Liquidity Services, a leader in e-commerce marketplaces for surplus assets. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Liquidity Services has just released their fourth quarter fiscal year 2025 results, and there's a lot to unpack, from their impressive market share expansion to their strategic initiatives in the circular economy.
Revenue and profitability overview. Let's start with the top line. Liquidity Services reported a revenue of $118.1 million for Q4, marking a 10% increase from the previous year. John, how does this reflect on their profitability?
It's quite significant. The company not only increased its revenue, but also improved its profitability metrics. The adjusted EPS came in at 37 cents, which is a 16% increase year over year, surpassing the forecasted EPS of 29 cents. Their net income also rose by 23% to $7.8 million. This growth is supported by their strong cash position of $185.8 million and no financial debt, which provides them with a solid foundation for future investments and share repurchases.
Segment performance and strategic initiatives. John, can you break down the performance across Liquidity Services segments and their strategic initiatives?
Absolutely. The company's gross merchandise volume GMV reached $404.5 million, a 12% increase. The CAG segment saw an 18% rise in GMV, driven by recurring sellers in heavy equipment and international sales. GovDeal's revenue grew by 17%, benefiting from higher commission rates and lower transaction fees. Meanwhile, the RSCG segment's revenue increased by 6%, thanks to improved inventory turnover and recovery rates. These results highlight Liquidity Services' effective expansion and service enhancement strategies.
Operational efficiencies and future outlook. Liquidity Services has also announced a $15 million increase in their share repurchase authorization. How does this fit into their overall strategy, and what can we expect moving forward?
The share repurchase is a strategic move to enhance shareholder value, reflecting their confidence in the business's future. With 4.1 million auction participants, they are well-positioned to capitalize on their market leadership. Looking ahead, the company expects double-digit growth in profitability metrics, driven by a higher margin business mix and operational discipline. CEO Bill Angrick emphasized their focus on scaling the marketplace platform and deepening client relationships, which bodes well for sustained growth.
EPS forecast and analyst expectations. John, let's discuss the earnings per share. Analysts had forecasted an EPS of 29 cents, but Liquidity Services reported an adjusted EPS of 37 cents. What does this tell us?
This is a significant beat, with the actual EPS coming in 27.6% above the forecast. It indicates that Liquidity Services is effectively managing its operations and capitalizing on market opportunities. The fact that only one analyst was surveyed suggests that the company might not be on the radar of many, but this performance could certainly attract more attention from the investment community.